Happy Friday, everyone. Now, Donald Trump is wrapping up his tour of the Middle East with $200 billion worth of deals in the UAE. But China hawks raise concerns about his all-AI tie-ups with the Gulf. Now, you're looking at live pictures, of course, of the president speaking at that roundtable in the UAE. Let's listen in.
We'll soon have a very safe country. We're getting people out. We need help from the courts. The courts are trying to think that they're taking privilege that they shouldn't have. That was not what the election was all about. The election was they want people that shouldn't be there, people that are criminals in many cases. They want them out. They want them out. We're going to get them out fast. We just reached a fantastic trade deal, as you know, with the United Kingdom, which was wonderful. And we have another big one that we just reached with China. The China deal is a very big deal. It's in the process of continuing to be formed, but they wanted to make that deal very badly. And we have, at the same time, 150 countries that want to make a deal, but you're not able to see that many countries. So at a certain point over the next 2 to 3 weeks, I think Scott and Howard will be sending letters out, essentially telling people, it would be very fair, but we'll be telling people what they'll be paying to do business in the United States. So essentially be paying to be doing business in the United States. I guess you could say they could appeal it, but for the most part, I think we're going to be very fair. But it's not possible to meet the number of people that want to see us. And but this was coming to UAE was very important. Coming to Saudi Arabia and Qatar was very important to me because of personal relationships that I had, maybe more than anything else. So it's been an amazing period of time. People have said very, I mean, I don't know, we're developing a lot of fans, but people have said they've never seen anything like's taken place over the last 4 days in terms of investment, in terms of the kind of money coming back into the United States. And all that money, the money is a nice word, but it's really jobs. We have jobs that are at a level that we very soon will not be able to. Nobody can duplicate it. And people want to be our partner. They want to be investing in the United States. And they weren't doing that. They weren't happy with the United States for a pretty long period of time. So we've done something that I'm very proud of. We'll be heading back now. And I look forward to that. We'll go back to D.C. I just had a little announcement of a beautiful grandchild, a boy, Tiffany and Michael. So we're very excited about that. I look forward to that. I probably should have left yesterday, but I couldn't disappoint you. Your father would have been extremely upset with me, and you would have been more upset.
He would have understood, sir.
We had such a beautiful evening, and they planned it so beautifully. I said, I'm going to have to wait just a little bit. But the way we were treated by your family, the way we were treated by Qatar, Saudi Arabia, and others has just been so I'm very proud to be representing the United States of America. And thank you all for being here. And media, thank you very much. You've been very fair. Thank you very much.
Mr.
Well, that was, of course, the President of the United States joining and talking from a round table in the UAE. Now, let's get straight to Simona Barsechi, who's been covering Trump's Middle East trip. She joins us, and she joins us now from Dubai. So, Simona, what do you make of what he's actually been saying?
Yeah, it sounds like that was a bit of a wrap, Francine, after a whirlwind trip around the GCC, visiting 3 nations, as we've been covering on the ground, Saudi Arabia, Qatar, and UAE. Some massive headline numbers coming through. And I actually observed that the numbers got bigger as he moved from country to country. Remember, the Saudi investment pledge was $600 billion. The Crown Prince Mohammed bin Salman saying they're going to raise that to $1 trillion. He got to Qatar. They pledged $1.2 trillion of investments in the U.S. And then the UAE now pledging 1.4 trillion worth of investments in the U.S. over the next 10 years. Of course, these are pledges. In terms of the deals, we did get a lot of firm commitments. In the UAE specifically, we're talking about $200 billion worth of deals, whether it's the Etihad-Boeing partnership. Remember, Boeing and aviation has been a big feature of this trip the last couple of days. Tie-ups between ADNOC and some of those major U.S. oil companies, but then also major development on the AI front, Francine, with the plans to announce this AI campus in the UAE spanning 10 miles. It's going to have a gigawatt capacity of up to 5, which would make it actually one of the most ambitious and largest AI infrastructure projects in the world, even outpacing Stargate. So really significant, but also just underscores how the Trump administration is actually working with these Gulf nations to help promote their own AI ambitions in providing them with some of the crucial high-tech chips that are necessary to power those data centers. So it's a bit of a break from the Biden administration that had imposed chip export controls. The Trump administration seems willing to loosen some of those restrictions, of course, with guardrails, but that raises a few national security concerns back home. But it does go to show that on the back of this trip, President Trump eyed an economic opportunity. He's going back to the U.S. with these commitments, with some firm commitments in terms of deals. And for the Gulf states, it was a major opportunity to showcase to the rest of the world not only their status within the region diplomatically and geopolitically, but also as growing financial capitals, as growing hubs to do business, and also showcasing all of the diversification efforts that these countries have undergone over the last few years, away from oil into other sectors of the economy that open up investment opportunities.
Yeah, a lot to unpack. Jumana, thank you so much. Jumana Bersetchi there. Now, the President, Donald Trump, we were listening to him just moments ago, basically saying that he will be heading back to the United States to meet a newborn grandson. In remarks there at that roundtable with many chief executives, he says we'll see what happens with Russia and Ukraine. He also said that Russia's Putin, he will meet him actually as soon as they can set it up. Now, President Trump has also made some major geopolitical moves during his Middle East trip. The U.S. president says he's ready to ease sanctions on Syria. He suggested the U.S. is closer to an agreement to curb Iran's nuclear activity. So let's also bring in Rosalind Matheson, Bloomberg's EMEA news director. So, Ros, he just wrapped up his visit. Was the 3 days in the Middle East, was it about foreign policy or was it just business?
Well, arguably for Donald Trump, foreign policy is business. I mean, the lines there are very blurred, very much a contrast also with the previous administration. And so in a way, these things intersect. Do these business deals facilitate foreign policy goals for the US? Does the foreign policy feed into the kind of deals that we saw? And this is very much an administration, again, where business, foreign policy really are hand in hand. And we can see that in the deals that were done. I mean, it couldn't really have gone any better, you would argue, for the states involved, for Saudi Arabia, for Qatar, for the UAE. I mean, this was a terrific outcome either for them, in terms of just having Donald Trump there, the effusive comments that were made around the relationships, but also all these deals, pledging investment into the US, but also, as Jumana was just saying, like really getting further leeway to build out the data center business in the Middle East, to get access to chips, even if that is, raising concern in the US, that does it also open the doorway to China? And for Donald Trump, just again, a message about how he operates as a leader. He's willing to do business with countries where the US was previously a little bit cautious. He's willing to do that in a full-throated way. He's willing to do deals in countries where he himself, his family does business. And those lines are also quite blurred from time to time. And he's willing to talk to leaders, again, that the previous administration would not have necessarily. And you can see that, the Syrian meeting that he had with the president, it's all very telling about the way that Donald Trump operates.
Roz, Iran, of course, appears to be casting a doubt on a possible nuclear deal with the U.S.
That's right. There's a lot of noise and rhetoric going on either side about this. And we can see that that's been upending the oil market a little bit the last 2 days as a result. But through all of this, what we know is that Iran presented a proposal to the US. The US has now presented their own version to Iran, which Iran is obviously looking at. But there's no set date for another conversation. There's no formal understanding of when those talks will continue. There is a sense from Donald Trump, from his rhetoric this week in the region, is that he is keen to get a deal done, that he does think a deal is possible. It's very unclear, again, what that deal would look like. There are still a lot of sticking points in it. Iran's position hasn't really changed. They say, yes, we don't want to develop nuclear weapons, but we do want to have the ability to do some enrichment, certainly at a lower level. Those parameters have not changed despite all this rhetoric this week. So this is probably a slow-moving thing. It's very difficult to get to a deal beyond anything that's bare bones very quickly. So the key thing now is, do we see a date for further talks mediated by Oman, and when are they going to happen?
Ross, as always, thanks so much, Rosalind Matheson, there, our Bloomberg EMEA news director. Now let's also bring in Monica Defend, head of the Amundi Investment Institute, to talk markets and to talk positioning in some of the major equities that we're seeing. Monica, as always, thank you for joining us. It's been a big week, and actually the market seems, to have gone back to some of the feel-good news that we've had. Maybe it's U.S.-China, maybe it's the fact that some of the data pointed to an okay economy. What do you see being priced in on the markets right now?
Well, probably the most astonishing thing that we have seen on the market is the US dollar and how decorrelated it from the equity market. Having said that, it is true that some trade deals are in progress, on, off, pause, but this policy uncertainty is certainly something that as investors we don't like. And eventually this is why we might enjoy the rally on the equity side, but overall we remain cautious on an asset allocation standpoint.
Because, Monica, you think that basically this is only temporary relief and something, ugly could come back, or some volatility, or how do you see the next couple of quarters progressing?
Well, in any case, we do see some slowdown in the U.S. economy. We've seen some companies avoiding to provide a forward guidance for the month to come, just because with uncertainty they don't know how to plan their investments. And when it goes to EPS formation, definitely the pause is positive. We lifted our projection on the S&P 500 operating earnings from 3 to 5%, and in Europe up to 2%. But again, this is subject to the pause to be maintained over time. And as of today, we don't know.
Monica, yesterday I also caught up with Jamie Dimon of JP Morgan in Paris, and this is what he said about a probability of a U.S. recession.
I'm going to defer to economists who give it about a 50% chance. I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
Monica, you mentioned some of the parts on which the markets are a little bit complacent about. What do you think they're most complacent about?
Well, probably the market is thinking that there won't be a recession just because it will be politically unwise. And the midterm election are eventually not that far away. So a slowdown, and by how much? Then probably where the market is less complacent is on the Fed, where we see and on the monetary policy, including the ECB, with a dispersion of projections on the forward guidance. And this possibly might allow some space on the fixed income. For example, on the Fed, we still believe 3 cuts for this year, which is not market consensus. On the ECB, we do expect 1.5 as a terminal rate, which is not market consensus. So probably some opportunity out there might play out, but rates we stay in a range bound.
Monica, one of my favorite podcasts actually spoke to Raphael Bostic. This is Odd Lots, and he sees 1 rate cut this year. He's also expecting, of course, the U.S. economy to slow down, but actually not fall into a recession. I mean, given what you said and some of the messaging from the Fed, what do you do with treasuries?
Well, on the Treasury, we have been setting back a positive duration bias. Having said that, we really need to play it tactically. We think the Fed will stay in wait-and-see mode until June. And then because we pencil in a slowdown in the U.S. economy, not a recession, we think the Fed will go ahead with 3 cuts this year.
What happens after this year? I mean, if and you've said that very clearly, like if you get 3 cuts this year, do then they slow down? Or is there a danger that actually if they wait too long, then they have to really cut aggressively?
No, this wait and see, data dependency, and probably more policy dependency really doesn't allow the Fed to be so clear in the forward guidance, just because they are uncertain on what is going to happen. And this is reflected on the asset classes, the fixed income as well as the US dollar, as I was mentioning before. And again, this probably the market was all consensual and complacent on this US dollar weakness. That was, by the way, one of our long-term trends that we confirm to be in place. And investors are becoming a little bit more skeptical on a tactical window. So probably we might see some movement on the currency place.
Monica, when you look at China, what happens with China now? They seem to have a pretty good deal, certainly better than we were all led to believe. How do you play China?
Well, on China, for the time being, we stay neutral when it goes to the equity exposure, with a preference for H share to A share. But the deal is imposed in a pause mode. What I think is that on the tech sector, there is a good complementarity between the US and China, and this is definitely a long-term trend that the two regions will be following, and that as investors we will need to consider.
Monica, what's the one thing that actually could, I don't know whether there's a play on gold or anything like that shows us the question around basically U.S. exceptionalism. Is gold something that you look at closely?
Yes, honestly, we are overweighting gold for two reasons. First is a good hedge and diversification tool at a time where the US dollar is not working anymore. I'm not expecting really a big rise on gold prices for the end of the year. We maintain our target at 33.80 US dollar. But at a time where you might have some uncertainty on the fiscal side, on rates, then gold might be a good asset class to invest on or to remain invested on.
And Monica, in Europe, I know there's been a lot of talk about, for example, Germany, their equities, or even some of the bonds, because of this massive defense spending package that's not expected to have an impact on the economy until next year.
Well, probably the European fixed income for a European investor, so in local currency, is even more appealing than the US market. In terms of growth perspective, definitely this is positive, but it will require some time. So honestly, when it goes to the trajectories on the GDP, we do expect this to materialize and be reflected in Germany on 2026 prints rather than now. Having said that, the situation in Europe is much more heterogeneous from a GDP standpoint, while inflation probably is a bit better than what is at play in the United States, and possibly the job for the ECB might be easier than the one of the Fed.
Monica, thank you so much. Monica Defender, head of the Investment Institute at Amundi. Now, coming up, Swiss Re profits rise despite losses from the California wildfires. I'll be speaking to the Chief Financial Officer next, and this is Bloomberg. Welcome back, everyone. Swiss Re has reported higher first quarter profits despite losses from California's wildfires earlier this year. Now, the Chief Financial Officer, Anders Malmström, joins us. Mr. Malmström, thank you for being with us. When you look at, the large, catastrophe losses actually in the first quarter with the hurricane season still to come, how confident are you that you'll meet your targets going forward?
Yes, so good morning and thanks for having me this morning. Look, I think, as you said, I think we had a very challenging first quarter with high man-made losses, but in particular with high natural catastrophes. But overall, I think we're very pleased with the robust results from the for Swiss Re with 1.3 billion US dollars result, and it came from all business units with strong underlying. Now, looking forward, I mean, the year is still 3 quarters to come. I think overall we feel well positioned to achieve our targets for the rest of the year. So yes, thank you.
Well, I understand that, of course, the increase in natural catastrophes have also coincided with a rapid rise in global temperatures. How difficult is it to understand what the current hurricane season will bring? I think last year was the planet's hottest year on record.
So it's a fact, as you state, I mean, that we will see, due to the climate development, that we see more events, more severe events. It's always very difficult to predict a particular year. I think sometimes you see more frequency, sometimes you see more severity. I think we're prepared for that. I think we also support our clients to be prepared for that. But it is definitely a trend that we see and that our scientists see and that we model respectively to be prepared.
I was going to ask, actually, how do your models change because of this?
So the models, they take into account what we see, and to your point, we see the changes. We see more frequency in certain areas. We see higher severity in certain events. I think that's what we reflect into our models. I think that's what then also gets reflected when we have the conversations with the clients to make sure that also clients understand what's happening, and they maybe also can take actions accordingly.
I mean, we know that the tax rate this quarter was favorable at around 14%. Why was that? And should we expect it to go back to 21% for the rest of the year?
For the tax, usually you should expect a tax rate of 21%. The first quarter, I think we benefited from some transaction-related positives, particular IPTQ, but also other events that just helped for Q1. But in the long run, you should expect a tax rate of 21%.
Swiss Re also reported significant man-made losses, I believe, this quarter, $140 million. What exactly were those?
So when we think about man-made losses, this can be aviation, this can be large kind of fires in plants. I think that's what you obviously, I think, seen in Q1. I think American Airlines, to mention just one, was a significant one.
I know you've also raised your reserves in the U.S. property and casual business, and casualty business, not casual, casualty business. How do you expect that changing over the next couple of quarters?
So we took a significant action in Q3 last year to strengthen our casualty reserves. I think we feel very comfortable. I think what you've seen in Q4, but now also in Q1, is that we actually saw some reserve releases coming through. I think this shows the prudent approach that we're taking. We want to make sure that we upfront take the right approach, and then I think over time we can actually release reserves, and this is what you have seen now also in Q1.
Mr. Malmström, when you look at all of your operations, where are you expecting to grow the most? Is there a region that you think you want to invest in because there'll be more opportunities?
So in general, I think we really take a bottom line view for us. We don't have top line targets. We have bottom line targets. We'll make sure that we are robust, we have strong underlying results. We can support our clients, which means it's important that we have a strong solvency, strong reserves. So we don't have an area that we say we want to grow more or want to grow less. We want to be well diversified and want to be global, and as I said, want to support our clients.
Thank you so much for joining us, Mr. Anders Malmström, there, the Chief Financial Officer of Swiss Re. Now, there's quite a lot going on in the markets. We checked not only equities, but some of the expectations that are coming through Fed governors. One podcast, actually, that I would urge everyone to listen to is Raphael Bostic, who spoke to odd lots. Now, this is the markets right now. Stocks are definitely rebounding. A little bit mixed. The dollar weakening for a second session as large market moves earlier in the week driven by the U.S.-China trade truce seem to be moderated. But in Europe, we're still seeing a big wave of green across the board. I'm looking at the 10-year Treasury yield a little bit lower after declining some 10 basis points yesterday. Traders pricing in 2 Federal Reserve rate cuts this year. Coming up, Ukraine stands firm after Russia sends a low-level delegation for talks in Turkey to end the war. We'll hear from a high-level official in President Zelensky's team next. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Donald Trump says China wants to make a deal, quote, very badly, as he addresses business leaders on the last day of his Middle East tour. Hopes fade for a ceasefire in Ukraine as President Zelensky describes the Russian team sent to peace talks as a sham. Plus, earnings in focus, Richemont sales rise on strong demand for Cartier, and Swiss Re profits are up despite losses from the California wildfires. We spoke to the chief financial officer a short while ago. Now, more on our top story, and President Trump has been speaking about the prospects of a trade deal with China during remarks in the UAE. Now, Trump says China is eager for a deal. He also said he wants to meet with Russia's Vladimir Putin as soon as possible.
We'll see what happens with Russia and Ukraine. I think 5,000 young people a week on average being killed in a war that is going nowhere. It's a shame. Should have never happened. But we have other things to do also. Plus, we have an Iran situation, which we're going to take care of. One way or the other, we're taking care of. It'll be taken care of 100%.
Now, the chief executive of the Italian defense company, Leonardo, says Europe is almost in a, quote, war economy. Roberto Cingolani also told Bloomberg he's confident that a major European defense firm will emerge that's capable of competing with Chinese and U.S. rivals. Now, he spoke exclusively to Tommy Ebhardt from the company's headquarters in Rome.
This first quarter, we had an increase of approximately more than 20% year over year. And in general, the financial figures are growing, yes. I mean, needless to say, we are in almost in a war economy, and definitely the defense industries are involved, the primary industries to be involved in this race for defense and protection. Now, we should also consider that most of this investment is not necessarily in weapons. Mm-hmm. There's a lot of digital infrastructure, new technologies. So maybe in the future we will have to reconsider how we evaluate the investment in defense, in that it is not only weapons or armored systems, but will be also digital infrastructure, supercomputation, cloud, artificial intelligence, cybersecurity, space. Those things not necessarily have been included so far into the true defense investment, but very likely in the future this will be the case.
We have discussed in the past several times about the future of Europe, the importance of euro. You have been working as a minister before getting the CEO job. Do you think we are somehow President Trump is making a favor to Europe, accelerating what you have been advocating for a while, the need for a cohesive defense common system?
Honestly, I don't think anybody is making favors to anybody else in this moment. There is an interconnection or an overlap of economical and financial issues and military and defense and global security issues. Sometimes the situation is a bit confused. For instance, applying tariffs made a shock to the market, but if we see in defense, the impact of tariffs is relatively small. And especially for Leonardo, having local production in US and local sale in US. On the other hand, I understand the argument that there is an imbalancement in the trading situation between Europe and the US, but this economy shouldn't be defense. On the other hand, I believe that the actual situation that has been created in Ukraine after the Russian invasion made clear that, first of all, Europe is too fragmented. So even though we have maybe 1.5 million soldiers in Europe, Those are fragmented into 27 armies. We have many fighters, many tanks, many helicopters. We have so many defense platforms that in the end of the day we're not very effective in the investment of our defense budget. The second thing that I think we should be noticed that no country can make on its own at European level to support and defend Ukraine. So clearly that was a bell. We have to wake up, we have to create a sort of European defense space. We have to boost the collaboration among defense companies. I mean, creating giants. I mean, if you see how big are the American and Chinese defense companies, they're much bigger than the biggest European ones, including Leonardo. That means facilitating the aggregation. That means favoring the synergy. Sometimes, from the industrial point of view, this means making choices and making priorities very clear. So this is happening, and in view of the NATO alliance that I believe should stay, should remain, should be reinforced, it is very important that Europe gets stronger and that we need to be a solid, more reliable partner in the NATO alliance as a continent. And this will make NATO stronger and ultimately will make for the Western countries life safer in the future.
Now, that was the chief executive of Leonardo, Roberto Cingolani, speaking to Bloomberg's Tommaso Ebhardt, our bureau chief for all of southern Europe. Now, hopes are also fading for a Ukraine ceasefire after Vladimir Putin sent a low-level delegation to talks in Turkey, while attention shifts to new sanctions to bring the Russian leader to the negotiating table. Well, earlier, Bloomberg's Oliver Crook spoke to the EU foreign policy chief, Kaja Kallas.
He's playing games, which shows that they are not serious about the peace. That is very clear.
Well, Oliver joins us now from the European Political Community meeting in Albania. Oli, good morning. So tell us how the Ukrainians are now approaching these talks now.
Yeah, so listen, Francine, we've just seen a number of different European leaders walk in. We just had the Danish Prime Minister walk in. We're awaiting Keir Starmer, who may pass any moment now. And really the main focus for this EPC meeting, the European Political Community meeting, which is really a brainchild of Emmanuel Macron that was launched after the invasion of Ukraine, is really a focus on European defense. And front and center here is basically the situation right now in Turkey. You're going to have the first contact between Russian and Ukrainian delegations of that level since 2022. We had that confirmed by the deputy of Ukraine's president's office a little bit earlier, who I spoke to, and I really asked him about whether or not there's any reason to be hopeful about these discussions, or is it, as Donald Trump has said in the past, that basically no motion is going to be expected until Donald Trump meets with Vladimir Putin. Have a listen to what Ihor Brusilo told me a little bit earlier today.
I believe that without Zelensky, Trump and Putin, there is no way forward. The only way forward can be is that if Zelensky meets Putin, and that's what President of Ukraine declared a couple of days ago. His readiness is absolute, and he is available anytime to go to Turkey and any other place to meet with Putin to talk about the ceasefire first, and then about all other terms and conditions of the real lasting peace.
And so now the question is, if there is no sort of progress made in Turkey, if there is no step towards a ceasefire, what will be the next steps by the Europeans? But critically, what will be the next steps by the U.S. administration? We should say Lindsey Graham, who is the author of this new potential sanction list out of the United States, was also in Turkey within those discussions. The question will be, at what point will Donald Trump determine that Vladimir Putin is actually the impediment to peace? And will, at that point, they be willing to move on sanctions? That seems, at this point, pretty far away.
Oli, turning to where you are now in Albania, what are we actually expecting this weekend?
Yeah, so for this European political community, this is really a task force of very wide European countries. This spans not just the EU. This also involves Turkey. It involves also the Nordics. It also involves the UK. And so as we await Keir Starmer here, one of the things we're going to be expecting is this discussion around the EU and the UK, a possible defense pact that could be signed as soon as Monday. So defense is going to be front and center. There's also in tandem discussions going on between NATO defense secretaries trying to set up a proposal, because really this is how Donald Donald Trump is running everything. It seems everybody is auditioning for Donald Trump, whether it's Zelensky, whether it's the EU, whether it's NATO. They need to come up with a proposal that is convincing to the United States in order to have continued support from the US and NATO. So there are these discussions about potentially finding a way to reach 5% spend across NATO countries. We've reported on this over the last couple of days. Potentially 3.5% of that would be strict defense spending. Another 1.5% could be sort of more expansive, sort of dual use spending. So these are the kinds of discussions that we're going to have from European leaders here. Again, as everybody around the world sort of sets up for this sort of audition for Donald Trump as he finishes his tour around the Gulf.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on this important meeting in Albania. Now, the EU's economy commissioner is warning that China against flooding the bloc single market with goods to avoid U.S. tariffs.
We do have quite a few trade protective measures already in place concerning Chinese goods. It regards, for example, steel, where we have a number of protection measures. More recently, we have introduced anti-subsidy tariffs on Chinese battery electrical vehicles, just to give some examples. And in a sense, if it is necessary, as a EU, we are using those trade protection measures.
Now, Richemont shares have jumped after the Swiss firm's jewelry division saw strong growth. That's as the continued popularity of its Cartier brand made the group more resilient than rivals like LVMH in softening luxury goods markets. Now let's shift focus to private markets, and private equity firms are under growing pressure to generate earnings from their portfolio companies. An extended period of muted deal-making and a slowdown in IPO is really forcing private market companies to find alternate ways to generate cash for investors. Well, we're now joined by Simona Maellare, Global Co-Head of Alternative Capital Group at UBS. Simona, as always, thank you for joining us. I'm so happy to have you in the studio and in person. I mean, it's been, tough, I guess, fundraising in this kind of environment. Are you seeing a little bit of a turn in terms of, appetite coming back?
What we're seeing on the fundraising side is that there is a polarization of money being directed to the best performer. So while in the past, LPs have been quite happy to diversify and sprinkling a bit their investment across a variety of funds, today is no longer the case. And this is driven really by the fact that distribution have missed expectations. When you look at the growth of the industry in the last 10 years, the assets under management have grown by threefold, while the distribution, the cash, has been reduced in percentage of the net asset value. So there will be winners and losers in the fundraising game, but funds which have consistent performance, a very differentiated approach to investment, will get the majority of the investment, and the others either will go into runoff or they will need to be consolidated.
Simona, do you think there are new avenues for fundraising for a lot of private funds that are tackling these difficulties? Like, what are they exploring right now?
Wealth management is clearly the channel where everybody is going towards. So we are seeing products being, while in the past it was just creating feeder funds and using wealth management platform to distribute funds, now the industry has become much more sophisticated, and we're moving to creating products which sometimes have a bit more liquidity than the traditional private equity fund to appeal to a broader investor base.
Simona, just hang on one second, because I think Oliver Crook is speaking to Keir Starmer, so let's listen in.
In relation to sanctions, but for me this is clear evidence that Putin doesn't seriously want peace. He's dragging his heels, and that's why today is a really important opportunity to work with colleagues to make sure that we are absolutely united, and President Zelensky will be here today, so we will be discussing the situation with him.
On the Brexit reset, how are the talks going? Will you have talks on the sidelines ahead of the Monday summit?
Well, in the last 2 weeks you've seen the UK do a trade deal with India, really important for our country and our national interest. Trade deal with the US, again important for our country and national interest. I'm positive going into Monday, and I think that this is an important moment for our country that will be measured in the benefits to working people and their living standards. But we're positive as we go into the summit on Monday. Thank you very much.
Do you think we'll get over the thorny issues, the fishy ones?
So that was the Prime Minister, of course, of the UK, Keir Starmer, speaking to reporters there in, of course, where Oliver Crook was. Simona, I mean, there's a lot. We'll go back to, some of the private funds and some of the fundraising they're exploring. But overall, there's been a lot of trade news. We're expecting UK, EU, the summit to be on Monday. Anytime there's positive news from trade, does it actually help with fundraising? If you look at some of the things that fund managers are trying to do to lure investors, is short-term confidence a real game changer?
Yes, it definitely is. And it's not only short-term confidence has a very important effect that helps the deal environment. And what we were discussing is that the LPs are still committed to the private capital industry, but they need distribution back. And the distribution is driven by the deal environment. Now, as you know, we started 2025 hoping for the animal spirits and this sluggish deal environment to improve. We haven't seen that, but actually it has been better than expected, because when you look, for example, better than we think, in April, the M&A in the US has gone up. There have been amazing deals, big deals in the tech sector, in the software, fintech. So if we keep the deal machine going and the liquidity going up, this virtuous circle will restart again. So all these signals are very encouraging.
But are there, it's still a very small trickle of deals, right? So are some smaller private equity market players going to be in trouble?
I think the smaller, undifferentiated, with poor track record will definitely be in trouble. The industry has grown maybe too much over the last 10 years, so a bit of rationalization might happen. So one of the trends we are seeing is consolidation. So you will see larger players trying to acquire small one to maybe enter new countries or to enter new strategies as well.
What do you see on fees? Are you seeing fund managers, for example, using discounts to lure in investors?
We're seeing more creativity, early bird, more complicated structure, this for sure. But I think overall there is still liquidity that is going to go around.
And Simona, do you really see a differentiation depending on the regions, on the countries where you're looking at actually doing some of these deals?
Yes, there is definitely differentiation. So when you look at Asia, the US and Europe, to do biggest generalization, I think in Asia they are looking at Europe now in terms of an avenue to diversify from the domestic Chinese market where most of the capital is flown, or they're looking at India and Japan. In Europe, we're looking at some cross-border as well, but there is a lot of intra-regional activity as well. I think the US is the one that is taking a pause and look at around the world and figure out who their friends are.
So interesting. We'll have to get you back in a couple of months to see more on that. Simona, thank you so much for joining us. Simona Maellare, their global co-head of the Alternative Capital Group at UBS. Now, coming up, we'll be joined by the chair of the Indonesia Chamber of Commerce, fresh from his visit to Doha, where he attended the state dinner with President Trump and the Emir of Qatar. That's next, and this is Bloomberg. Welcome back, everyone. Now, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Indonesia has offered to buy more American commodities, including oil, as it seeks to rebalance trade with the U.S. Indonesia has emerged as one of the 18 countries being prioritized for trade talks by the Trump administration. With us now, Anindya Bakrie, the chair of the Indonesia Chamber of Commerce and Industry, but also chief executive of the Indonesian conglomerate Bakrie and Brothers. Thank you so much for coming back on The Pulse, Mr. Bakrie.
Thank you very much, Francine, for having me here.
You've just come back also from the state dinner in Qatar. We're looking at pictures that were really quite extraordinary. I mean, this is a big week in the agenda of President Trump, but also in the Middle East, where deals were signed and there seems to be a much more normalization. What do you take away from Qatar?
I think, first of all, it was a very good state dinner, but everybody came away with a positive vibe, right? You see a lot of trades being talked about, investments, you see the headlines, but most importantly, the peace and stability in the region, in the Middle East, I think will be achieved. And that's very important for the world. Especially us, Indonesians, we come from Southeast Asia. Next week, we're going to have ASEAN, which is the Southeast Asian organization. So looking at that, I think people are looking forward to much better second half. And of course, going forward as well.
I imagine Indonesian business wants stability, like all businesses around the world. And there was a sense in the last 5 weeks that President Trump's policies were a little bit unpredictable. Do you feel after this week in the Middle East, but also talks with China, that we have more of a stable footing, that we understand more what the future looks like in terms of business?
Yeah. So, for example, Francine, 2 weeks ago, I was in the United States. We met our counterparts, U.S. Chamber of Commerce, U.S. ASEAN Business Council, Business Roundtable, and even National Council of Wheat, Soybean, Meat, Dairy, just to understand what they think about these tariff possibilities, right? They actually feel they really want to do a deal very quick because any tariffs increase will, of course, bring inflation to them. So I think they will put a lot of pressure to the government, and I feel it when I was there. From our side, the total trade with the U.S. is about $40 billion. And the U.S. is the second biggest trade partner of Indonesia, the first being China, about $130 billion. The surplus of $18 billion goods can be mitigated, as you mentioned, as we can import more oil and gas derivatives from the U.S. But I think what's interesting, in 2 to 3 years, we can actually double that 40 to become $80 billion. We will import a lot of soybean, wheat, cotton, also meat, dairy, but we want to export a lot of the same things such as electronics, furniture, footwear, garment. But what's also interesting, as we are talking anyhow in the next 45 days, what we see, the government is also putting critical minerals into the mix. And that's interesting because, that will be a nice investments, co-investments opportunity between the two countries. And lastly, I want to say, Indonesia just launched the Sovereign Wealth Fund around 2 months ago, $900 billion AUM, so we can also co-invest somewhere in the value chain with the U.S. So a lot of things have changed and triggered from these current tariff discussions.
I mean, things have changed for the worse, or actually for the better. I understand. Again, this is an ongoing negotiation. It's interesting that critical minerals, energy, and manufacturing will be impacted.
Yeah.
But does it change your supply chains? How does it change, the fabric of business?
Yeah. First of all, I'm speaking on behalf of the private sector, right? The government will do what is right for both governments. But what I feel is that it unlocks a lot of the possibilities for Indonesia on many fronts. So, for example, before we were exporting, the garment, electronics, furniture, and so on. Now we're talking about processing critical minerals. People understand that we have the largest nickel reserve, top 5 in terms of gold, copper, and so on in terms of bauxite and tin, right? So we can process it halfway. Other than also sending it to the east, we can also sending it to the west. The second thing also, the co-investment opportunities. We have about dividends as a country into the Sovereign Wealth Fund, about $10 billion unlevered. Now we can also think about upstream opportunities, for example, in the U.S., while the U.S. can also invest in the downstreaming plan of Indonesia. And lastly, what I would like to also mention is that the trades can make both countries go up the value chain, but we want to be very careful because we want to be very much balanced, right? We are doing a lot of businesses with everywhere in the world, with China. We joined BRICS, for example. We are in the accession of OECD. So Indonesia now, hopefully, will be Indonesia better in the future.
I know the French president is coming, I think, at the end of May to Indonesia for a state visit.
Yes.
How does your relationship with Europe changes because of what's happening with U.S. trade?
So, for example, President Macron is coming at the end of the month, but also the Premier China also come to Indonesia at the end of the month. So you see how Indonesia is trying to, just like how Qatar is in the Middle East, for example, Indonesia as the biggest country in ASEAN, Southeast Asia, the only one representing G20, we want to play a role, but ultimately we want to bring welfare to our people, but also to the world.
Yeah. Can you do both? I mean, if you try and be in the middle, how difficult is it to have a good relationship with China if you're trying to negotiate with Donald Trump?
Actually, Francine, if you think about it, number one trading partner is China, number two, the U.S. The U.S. wants it balanced, and we support, and we want to increase it 2 or 3 times. So maybe, net, we can also benefit. But again, I'm not here to say everything is easy, right? Inflation is okay for Indonesia. We're at 2 to 3% max.
Enviable for most countries.
Yes, thank you. But if the world is having inflation, our trading partners are having inflation, it's not good for anybody.
Yeah, thank you so much for joining us on air today. That was Anindya Bakrie, the chair of the Indonesian Chamber of Commerce and Industry. Now, also don't miss the new edition of Bloomberg Weekend newsletter, where you can get deeper analysis, feature pieces, and profiles that provide unique insight into the latest news from around the world. I know this week we're really focusing on some of those trade wars, trade agreements, and trade tariffs. Now, stocks pretty much mixed. The dollar weakening a touch for a second session after some pretty large market moves that we saw earlier this week, driven by the U.S.-China trade truce that was moderated. I'm also looking at 10-year Treasury yield lower after declining some 10 basis points yesterday, as traders pricing in 2 Federal Reserve cuts this year, and then a gauge of global stocks pretty much on track for an 8th day of gains, hitting levels not seen since February when it set a record. Up next, Bloomberg Brief, and this is Bloomberg.